All right, so there's a lot of fear in the markets. Iran, war, there's US oil move into these levels of 100, maybe even higher potentially. Stock markets have dropped significantly. Everybody's in fear and doubt in terms of what's going to happen in the markets. And I want to give you guys my prediction and break down what I'll be doing in this market. Let's get straight into it. I'll start with my breakdown of the indices and where I think they will move in the next few days and weeks, and then we'll move on to other sectors and markets. Right, so here we have the S&P 500, the SPY. As you can see, I've already made some annotations here for my community where I've been sharing certain structure levels. When we broke this level here, this was the key pivot. Okay, the key shift into a bearish market. Previously, we were in a consolidating market with some hope of a bullish move, but finding resistance around the 7K. So I don't want to dwell on that too much. We are where we are right now. And a lot of traders are thinking that this is it. Okay, this is it. We're gonna get a rebound. April's coming. April's historically a good month in the markets, and we're gonna move higher. Now, as you can see here, this key trend line for me is the risk on, risk off divider. Okay, so under this trend line, we are still risk off. Above this trend line, we are risk on. What I think will happen in the next few days is a move similar to this. We go up to the retest here of this previous support level, resist, and then we build structure. The April bullish traders, the ones that are saying that in April we're going to get some sort of bullish market, will be looking around this level here, between here and here. Okay, so between 640 and 635 will be a level where they're looking for the breakout to move into risk on. If we do get a more aggressive move to this level in the near term, so the next week or so, we could actually see a deeper move in the market, because around this level, the risk reward ratio has become very nice for the continuation trade on this bearish move. And then we have this 618 level as the next support. Around here, I would say we then develop a bullish divergence of some sort, and then we are looking at around May. Okay, so what is a given in the next few days is a move to the mean. Okay, whether that's this level or this level, meaning whether it's 652 to 645, we will get that move very, very soon. The only thing that will be creating an unexpected situation is if there is an escalation of the war. Then of course we will go straight down and there won't be any reason for this market to revert to the mean. In my opinion, I think they're going to still go through the negotiation process, and during that period we will get a move to the mean reversion. We are overextended. I mean, the RSI has given us an overextension sign, but there are other indicators and other ways to identify that we are in an overextension, and we'll probably get a move to the mean here, come back down or around this, and then rebuild with a double bottom. Okay, that's really what's going to happen here in the near future. But this move will definitely happen. Okay, that's something that is almost guaranteed. Very high probability. I wouldn't trade it myself, and I'm not looking to trade it. I'm looking to trade only the short to 618 right now. So from 650 to 618 will be the short that I'll be looking to trade. I am bearish and I am leaning towards a risk-off market, and I like the short in this situation, and I would only start looking at longing once we clear this trend line. Okay, that's what I see in the market. QQQ is very similar. The NASDAQ, you can just have a look here really quickly. Very, very similar. And I think QQQ will have a bigger snapback than people expect. I think this will probably move quicker back to 580 than other traders expect. We do have a gap up right here today. Yesterday we had a little bit of a move higher and then we ended lower, but we do have a gap up today, and this is a clear sign that we're probably going to get some momentum back to the mean. One of these levels right here, previous support turned now into resistance. Still looking at this trend line as well, and I'll be looking at this very, very carefully here for the shift. A lot of people online will be talking about this bounce here as now we are moving bullish. Without clearing this trend line, be very, very careful. Okay, the structure is not bullish. We might have a nice bounce, but we're not bullish. In terms of sectors, we have tech, and I'll just run through quickly on the sectors here. Tech needs a snapback. As you can see, overextended, needs to come back to these levels. Finance, very similar, and we've actually seen 2 days of mean reversion here with finance, and we could actually move. I think we'll move to the trend line. All of these are in a mean reversion from a short, except energy, which will be in a mean reversion from a long. Okay, so it will come back down. So what I expect is actually a rotation back into risk on assets temporarily for that mean reversion, with energy drop into one of these two levels here. This is a previous high, and then this level here as well. One of these two levels as we figure out where the direction of the market will go. Last week, I ended up trading US oil on the bounce of this level, and it's done fairly well, moving from 90 to 100 on the continuation. So yeah, this is what I expect in the sector rotations. Mean reversions, we are in a mean reversion stage. I do not trade them. I am looking at the shorting opportunity on indices, and I'm also looking at once we get the resistance on the indices, I'm looking at shorting opportunities, and I'm looking at longing US oil once we find support on a dip. We did find support on US oil. So we did find support around this 20 EMA level, and I traded around, I think it was a 90.05 for this move all the way up to 100, 106. I ended up selling a little bit early, around 96 on the lower time frames I was trading in. But yeah, the move worked out, the idea works out as well. One of the ideas that I shared last week in the trading community that I run, and you can join with the link below in the description of the video. In terms of gold, gold as well is due a mean reversion. We had a huge sell-off of 3-4 days of aggressive selling off here, and I expect a mean reversion to one of these two levels, and we're on the way there. At these levels, we will expect resistance and bears going in for the short again. I will assess once we get to these levels whether I'm leaning bearish, but I am looking at shorting gold once more once we move up higher and find resistance at these key levels. Cacao is one of the trades I'm looking at in commodities. I think it will move higher. We've had this initial break now, and I've had an alert today on this break, and I'm looking for the continuation play for the higher high. We'll be looking at this potential move developing like this, and then moving up higher, create a new high, maybe around this level for 1 to 3, 1 to 4 risk reward ratio on this one. Yeah, mean reversions, be careful. And currencies as well are showing signs now that we've seen a bit of an overextension on the dollar. So the dollar will have to come back down. To show you guys the dollar really quickly. So we've had the bounce here on the dollar, and then we've had the overextension. We could go to the next target level around here before we get the resistance. And that's it for today. If you enjoy this content, you can also join my trading community. There's a free section where you get some opportunities I'm watching out for during the week. And you can also go and join the Insights group, where I provide research and analysis throughout the week on the best ideas that I'm looking to trade. And soon we're going to be opening up the execution section of the group, which is having access to all the trades that I am trading, with entries and exits and risk management and trade management included. Okay, take care. See you next time.